Welcome, everybody. This is Edgardo, Balentine.
And this is DiGregorio, and welcome to the Real Estate of Tomorrow podcast, where we're going to discuss the rapidly changing landscape of the real estate industry.
And the steps that you need to take today in order to survive tomorrow.
Look, I'm going to give you the perspective of a 25-year veteran, somebody who has been there and done that.
Which is a slime for all fart, okay?
That's for you, man.
Look, I'm going to give you a fresh perspective from somebody that's applying those steps today.
So that basically means you're young and you don't know shit.
All right. Let's get this started. Welcome, everybody, to another episode, man. How you doing?
I am doing fantastic, man. Glad to be on the greatest podcast in the country with you.
That's right. Listen, I'm excited about this one because I think this is going to be our most tactical podcast we've done so far.
Yeah.
Right? So I think especially people that are in the real estate industry and people that are interested in buying a house or in the process of buying a house are going to take a lot of value from this one because this is something that's affecting everybody. And look, we're lenders, so we are the number one people that are affected by this, and is how the hell do you compete with cash offers in this freaking market?
And look, you're too young to know this, okay? I have wisdom, and my wisdom tells me that I've never been in a market in 25 years this challenging at all. And here's what I'm seeing that's a huge miss. I'm seeing real estate agents and mortgage professionals running their business the same way today as they did 3 years ago, 5 years ago, etc. And that's insane because we're in a totally different world. So things that we used to do on the back end of a deal, we need to start doing on the front end of a deal. Things that we used to thought were the norm, now we need to challenge that. We need to completely flip our perspective around.
Unfortunately, that seems to be a theme in the real estate and mortgage industry, though. It's not an industry that tends to move forward very quickly, right? The fact that we have had loan applications only in the past 4 years really adopted in the past 4 years and not before that. It's pretty crazy because everything was online before. The fact that right now in the mortgage industry you cannot do what it's a true 100% e-closing, it's pretty crazy.
Yeah.
So that's it's not uncommon that obviously the players in these industries don't change as easily as they should. But that's what we're here for, man.
And I'm going to give a little historical perspective on that because here's the thing.
Boring.
The internet reached, really got going right around the time that the real estate and mortgage industries were collapsing. So during a time where the internet really grew, right, like 2005 to now, the mortgage and real estate industries was something most people didn't want to touch up until a handful of years ago, and that's when it started going. So it's the collapse of 2008 that played a large role in this. But look, enough of this stuff. Let's jump into the first thing, and I want to take it, okay?
Before we do, and sorry to cut your wings there, but this is something that I think it's important for people that are new to the business because it's tactical, but they can adopt it immediately.
Yes.
And obviously people that have teams and things like that, they should really set up meetings and trainings around this. So go ahead. Take the first one.
So the number one challenge of fear of people accepting a financed offer right now is the appraisal. Okay. And appraisals by design look backwards in time. During 2009 and 10, all of my deals were appraising high because everybody's like, hey, instant equity. I'm like, no, just the market's falling. That's how it happens. In an increasing market, it's the opposite. Appraisals frequently come in low. Some people view that incorrectly as I'm overpaying for the property, and it's not the case. So what I know we've done in our business, and we've encouraged our real estate partners to do, is to use what we call an appraisal gap strategy, which, this is a numbers thing. Talking about numbers on a podcast, one, is boring, and two, is confusing as hell, so we're not going to do that. Here's what I'm going to say. If you're a real estate agent listening to this, and you're working with a lender who does not know how to leverage different PMI, mortgage insurance strategies to offset low appraisals, you're literally working with the wrong lender. So basically, there's a way to do a mortgage insurance premium add-on where I did a comparison where somebody was buying a $500,000 house, putting down 20%. It appraised $50,000 light. We did what's called an upfront mortgage insurance premium. Their out-of-pocket stayed exactly the same. Their monthly payment went up $13 per month, okay, which was an impact of the mortgage insurance.
So basically, what the person is doing is they're putting the same amount of money down, but instead of allocating the full amount that they're putting towards the down payment, they're allocating a portion of that towards the mortgage insurance, which ends up for the client being basically a very, very minor change. And look, yeah, $13 in one deal. Sometimes it's less than that. So
Sure.
it's very exciting. Now, there's a big caveat to that, and that doesn't work with FHA mortgages.
Look, this doesn't work with minimum down borrowers, right? Minimum down conventional FHA, VA doesn't work. I would say it works with a minimum of 10% down.
Right.
But here's the tactic, right? You talked about this being a tactical episode, and it is. Here's the tactic. What most lenders do is once an appraisal comes in low, a good lender will propose these solutions to the buyer. What we have to do differently here is we have to have that conversation on the front end, like at the initial qualification stage, the initial consultation. And now the conversation goes like this. Okay, Mr. and Mrs. Buyer, here's a whole bunch of statistics to prove that the market's strong and it's not going to crash. Here's a whole bunch of reasons why appraisals come in low. It has nothing to do with you overpaying for the property.
Actually, the house have been appreciating at a faster pace than their comparable sales 6 months ago.
Exactly.
So it's actually positive in a way.
Exactly. And here's the kicker. Mr. Buyer, here's what I want you to do. When you put in that $500,000 offer, I want you to put in there that you're willing to cover the appraisal shortfall of up to $50,000. Okay? And the buyer, and in doing that, sir, your out-of-pocket will stay the same. Worst case scenario, numbers go up about $13 a month, okay, which I would argue is the same number on a $400,000 loan. And now all of a sudden, these offers are considerably stronger because we are addressing the one of, if not the biggest concern that sellers have in taking a financed offer. And we'll talk about it later on. A phone call to the listing agent from the lender explaining that strategy goes a long way.
Yeah, I mean, it's a very powerful strategy, and think about it from the buyer's perspective, right? A lot of times we're thinking about this type of markets and we just think about the seller and getting the offer accepted, and I know this is the podcast, but also when it comes to the mindset of the buyer, to get a call saying, hey, the appraisal is $20,000, $30,000, $50,000 short, it's a lot of stress that comes to it. And with big moves like this, we want to minimize the stress and we want to try to answer questions that they haven't asked yet, right? So by presenting that in the very, very, very front end of things, the conversations that we're having with our buyers now when the appraisal comes in low is, okay, so that's plan B, right? And you just go, yeah, plan B. And the transaction moves in just as smooth as it was before. So good segue to the next one.
Yeah, one more point though I want to make is that putting forth that appraisal gap strategy without a market analysis and a little background on why appraisals come in low is a miss.
It's irresponsible.
Yeah, you have to put the things together because you have to instill confidence. And I believe it's the lender's job and the agent's job to do that with something other than no, trust me, the market's going to go up, you should buy now, because that sounds like a sales pitch.
I think you mentioned something important. I think it's the job of both in conjunction together, because if it comes in from it's and I appreciate this. It's very hard for a realtor to deliver this by himself and not sound like this is just a sales pitch. But once you include the lender and the numbers and how this happens from a mortgage standpoint, it becomes a lot more credible.
Absolutely.
Right?
Absolutely.
So it's interesting. So
that's the first strategy, okay? Have the PMI conversation about a low appraisal on the front end and have that reflected in the offers, in the way the offers are structured.
And then, like we said, later on, we're going to talk about getting on the phone with the listing agent, even with the lender, and explaining what the backup plan is.
Absolutely.
Because what we don't want sellers to think is that this is just a bullshit, yeah, we'll put the $50,000, but just accept the offer and then
we'll find a reason to back out of the deal. We'll blame it on something else.
Right, which has happened a lot lately.
That's what happens.
So anyway, so that's number one. It's easy. It's something that if you have any lender that's somewhat good, they can start applying that right away. And I would recommend that if you're a real estate agent that you're running into this problem, make sure that you understand the presentation that your lender is giving your clients up front, because this is something that I guarantee it's gonna increase your batting average. It's gonna increase the amount of people that are qualified right now that will actually get under contract than just the people that are qualified that are not getting under contract. So that's important.
And if you want a snapshot of that, a sample one, send us an email, success@realestateoftomorrow.com, and we will reply back to you with a snippet. We could even make a custom one for you on a particular price
point. If you have a specific price point, we can do that, and that's super easy. Same thing with the down payment.
Yeah. Now next, pre-qualification or pre-approval. Go.
Well, I'll give you one better, right? Everybody's fighting about, well, this is a prequel, this is a pre-approval, this is a prequel, this is a pre-approval. Well, in this market, I'm sorry, man, but neither of those is going to work, because now you're not competing. Before you were competing, well, is this a prequel or this is a pre-approval? Now you're competing, is this a prequel or this is cash?
Right.
Or is this a pre-approval or this is cash? So what we're doing is we're actually sending a loan commitment to the clients and to with the offer. So the loan commitment basically takes everything to a whole other level. And this is what happens once the file is fully underwritten. Obviously pending things like appraisal and then title and things like that. But basically this is the lender saying, hey, we went through everything, not just some income docs and the credit, but we actually verified these income docs. And now we're saying, based on this, as long as the property itself can be qualifiable or can qualify, things like condos and appraisals and things like that, the loan is as solid as it gets. So when you send that with the specific date and it says exactly what they're missing and how long this loan commitment is good for, this is, almost as good as cash. And what's cool about this is a lot of times when we go as far as the loan commitment, we can close almost as fast as cash offers. We can close in a couple of weeks.
And I have some of my more qualified buyers actually putting in offers without a financing contingency.
Absolutely.
With a solid earnest money deposit, because now we've removed the financing concerns and we've removed the appraisal concerns, or at least dramatically addressed the appraisal concerns.
Well, at that point, you're basically putting no contingency other than the inspection, which is an inspection contingency is typically 10 to 15 days. And if we're as far as the loan commitment, as long as we get the appraisal, or in some cases there's appraisal waivers, we can close within those days. I'm having buyers lately that they go in and they just put cash offers, and obviously this is for wealthy clients too that have the opportunity to do this, and they've told me, like, look, if we don't close on time, I'll just pay cash and we refinance afterwards. Right. And as long as we have that, we're as far as that loan commitment, 9 out of 10 times we do it, just because we don't wait for condo docs or anything like that.
Yep, it's an important strategy. So now we've taken out appraisal, we've taken out the financing contingency. Well,
I have a big problem here.
Okay.
Right? Let's come up with issues.
Yeah.
Great. You take out appraisal contingency, you take out financing. This person is perfect. They can qualify easily. But I have a problem, Scott, man. I'm living in my house that I own, and I need to get rid of this house before I can move into the next house. And as much as I'm a good borrower, you know how it is in this market. It's tough. So what do I do?
So this is an exciting thing that we've brought on, and we've partnered with a cool company. There's more than one out there, but we've partnered with a cool company with this.
As cool as this one.
And the answer used to be easy. We'll just do a SIMO, right? Well, people used to come to me all the time, right? Chicken and egg. Do I sell first and then buy, or buy first and then sell? And what I used to tell people was, you're going to probably compromise either way. If you sell first and then buy, you're going to be so time crunched that you might end up settling for a house that you have regrets with. Not good. If you buy and then sell, you may end up accepting a sales price lower than you would have otherwise, and you're leaving money on the table. Now, that's the answer in a normal market.
Well, and think of it from a much larger point of view. This becomes a self-fulfilling prophecy, right? We are all saying there's no inventory is a problem, there's no inventory. I have a house that I want to sell because I want to buy, but I'm not selling my house because I'm afraid that I'm not going to be able to buy on time and sell. So you have, a large percentage of people that want to move up, but they have this issue, and then the inventory problem that we're living through just continues to extend itself because everybody's in this boat.
Everybody's afraid to sell because if I sell and I can't get a contract accepted, I'm gonna end up homeless, which is real, and I have clients in that situation.
Of course.
So the solution is the trade up program. So we have partnered with a company called Revive. By the way, we should probably get a sponsor from them or something. If
I know we should, but you know.
Anyway,
are we allowed to say this? If you know, the partnership that we have with them is there's a little discount.
There's a discount on the fee.
If they do the loan through us.
So Revive has two programs that are super exciting. One of them specifically addresses, Ed, what you talked about, which is the trade up program. So Ed, you want to sell your house now, you have it free and clear or a lot of equity or what have you, and you want to buy another one. I was just working with a client on this where they just didn't have enough income for a bridge loan. They just couldn't make the math work. And the way it works is this. You get, again, fully underwritten, okay? You get qualified by Revive, which is predominantly just verifying the value of your current home. And then you go out on the market, you find the house you like, you put in, Revive puts in a cash offer with a 15-day close. Revive buys the house cash. You are able to move into the house. You then have 4 months to sell the house or to buy the house from them. Plenty of time in this market to sell. And then you pay them exactly what they paid for it, but they charge a 3% fee. Okay, and again, that fee's a little bit less with us, but
let's
still.
just stay there for a second because I know that there's some people listening. They go, see, 3% fee or 2% fee, whatever it is. That's not worth it. Well, think about the alternative. Think about what's happening if you stay in the house and how much more the house that you want have been appreciating, right? Think about how much more if you actually decide to jump into the house. Think about the cost of holding two mortgages. Think about the lost opportunity on putting offers when you put a contingency that you need to sell your house, or put a contingency that, you know, when you sell your house, let's say you put a contingency, you have to stay in the house and do a leaseback for 60 days. That becomes, when you actually quantify that becomes much more expensive than the fee, especially for move-up buyers, right? Because all houses are appreciating, but 10% of $1 million is more than 10% of $500,000. It's proportional.
Roughly double.
It's proportional, but it's not the same.
Right.
And I like the analogy that we talk about the train, right? There's a train moving, and you want to be in the first wagon. Right? It's really hard to jump on the train when you're standing still. And this allows you to just move from wagon to wagon and get there.
Yeah, and to get into the math, and everything you touched on to kind of offset that fee, I think is valid. But to get into the math, homes are appreciating about 1% a month. So if you have 4 months to buy the house, I would call that potentially a break even.
Right.
Secondly, and this is impossible to quantify because you can't get inside the seller's head, but it is reasonable to say you're going to negotiate a lower price with a cash offer than you would with a financed offer. Okay? Again, you can't put a dollar figure on it because you never know what the seller will or won't accept. But I think that 3% fee gets offset pretty easily.
And that's best case scenario. I mean, again, I think and look, take it from somebody that's, you know, like you, but I've also been looking at this market from a buyer's perspective for my primary home. You're happy where you're at. You know, you're about to get a reverse mortgage soon. But for me, it's, you know, we've seen the market appreciate. And don't get me wrong, my house has been appreciating nicely. But again, proportionally, it's just not the same at all. And so the missed opportunities, I put an offer the other day, and it was a mortgage offer. And when we talked to the lady, to the listing agent, and she basically laughed at us and said, we're already $10,000 over cash. And, you know, it's not so much, oh, well, we missed that house. That's fine. That same house 2 months later is going to be much more expensive, and that's a missed opportunity. So look, there is a solution to this problem. One of the solutions is this Revive problem, and again, think of how many of you buyers or how many of your buyers could benefit from this, and if we all collectively do this, I mean, think how we can slowly get closer to solving this inventory crisis we're in.
Yeah, and that has to be on our mind. This inventory crisis is going to, in many communities throughout the country, displace families because they're just simply not going to be able to live there. You know, I don't want to go off topic, but at least here in Southwest Florida, and as far as I know, most of the country, the rental market's just as screwed up as the purchase market, if not more so.
It's worse.
So the Revive program, the trade-up program, is a really, really strong program. Again, not for everybody, nothing is, but it's good. The other, I mentioned they have another program. The other program they have helps people maximize the resale value of the house. Revive will actually send in a Matterport camera, look around. They have a team of experts that says, hey, if you do this $20,000 worth of work, you can increase the value of your house by $40,000. If and then they will actually provide the $20,000. They attach a small lien on the house. When the home sells, they get their $20,000 back. And you might ask yourself, where the hell are they making their money? Because 20 in, 20 out, that's no profit. And the answer is simple. They control the contractors that do the work, and they have a negotiated rate with the contractors. The people aren't paying more; they're paying market rate for it.
Right.
But the contractors are making less because Revive is setting it up for them, and that's where they make their spread. And you could actually use those two programs together.
Right.
So now this is, and by the way, like, okay, cool on a deal. This is a great way to save it. What about during your buyer presentation, during your listing presentation? All of a sudden now you are easily standing out, and it's not so much, because I've never seen so much commission pressure in my entire career. And I'm sure if you're listening to this, you know what I'm talking about. So now this is a nice way to differentiate yourself on the front end, and also the ability to save the deal.
So, now we have solved the problem with appraisal. The appraisal commitment can be virtually completely gone. We have solved the problem with how to compete with a more attractive cash offer versus just a pre-approval. We have solved the problem with somebody that's a move-up buyer. I think this fourth one is probably the simplest one, but the most important one.
100%.
Because if you solve all these problems, but if you keep it a secret, which is, interestingly, a lot of people do this,
yes,
then you're just as good as the prequel offer from, whatever, lender.com, and that you have nothing to show for. And it's a simple but very important listing or call to the listing agent with a good presentation. I would say more than just the call. Give the call to the listing agent, but also send something that shows what you're doing with this client and shows why this offer is so much stronger. So for example, to call the list, okay, we have just to go with the first one, the appraisal gap strategy. To simply send an offer and say, hey, my client will put up to $50,000 over the appraised price. That's fine, but especially the listing agents that have been around for a while, they know that you can put anything there. And at the end of the day, there's many other ways that the buyer can back out of the offer and still get that escrow deposit. So it's a lot more powerful to tell the listing agent and to show the listing agent, hey, listen, we're putting this offer and we're able to put $50,000 over the appraised price because we have something called an appraisal gap strategy, and this is how it works. So we're prepared, the buyer is prepared, the lender is prepared with this backup plan. And as soon as the appraisal comes in, if it comes in lower, we're going to execute that plan, and we're not going to miss a single day during the closing. And that's powerful.
It is powerful. And there's two other pieces of it that I think are important to discuss. Number one, and this is just sales 101. When somebody's confused, they say no. So if you send something like that to the listing agent, they're going to go, I don't understand what the hell is going on. This is probably funny business. No, don't take this offer, Mrs. Hell. That's number one. Number two, if the listing agent's good, they may come back and go, that's cool. Show me proof of funds for the extra 50 grand.
Right.
And I have plenty of cases where they can't actually do that.
Sure.
So now all of a sudden it looks like smoke and mirrors. Not only is the deal not getting accepted, maybe now future times that you're submitting an offer to that listing agent are impacted. So, this is specifically a lender thing. So the lender needs to get on the phone, send a video, do something to communicate the why behind it. And the how, the why and the how.
And the package. I mean, again, that PDF that we were talking about, that, if anybody wants it, we'll be happy to not only send it, but customize it for them. It's something that once you see it, is very simple, and you can see how you can, bridge that gap.
Yeah.
So it's a very easy, simple, it's a 5-minute conversation with the listing agent that can make the biggest difference. Same thing with the Revive, I would say. Look, when you get an offer first of all, we have to understand that right now, 1 out of 6 homes in America are being bought by an institutional investor. And there's a couple
AKA
things.
Wall Street.
Yeah, there's a couple things that come with that. There's one, especially for realtors that are not used to this market, there's something that feels shady about seeing a name like an institutional, a company as the buyer. Look, I know specifically, I had a listing agent that called me and told me, hey, I know this doesn't affect you. I know this doesn't help you in any way, but in my listing, we got an offer from, whatever, ABC Inc. And when I talked to my broker told me, yeah, a lot of these companies put a cash offer that's above the price, but then they come and hit you hard with the inspections. Be careful. Look, true, not true, whatever it is, that doubt was planted in that seller, in that listing agent, and by being planted in the listing agent, it was planting in the seller.
Right.
So they could have very easily lost that offer just because of that. Now I told her the statistic, and she's like, okay, well, that makes me feel a little better. So that's one part that goes through people's mind when they see an institution, a company buying the house. The second part, which, believe it or not, there's still people that feel emotional about these transactions, is, look, some sellers want to feel good about who they're selling their house to. Some sellers want to feel an attachment to their house, where they go, I want a family to live in this house. I grew my family here, and I want whatever to live in this house, not just, somebody that's going to increase the rent and go crazy. So same thing, even with something like Revive, helping as an agent and calling the listing agent and saying, hey, I know you see ABC in the name, but this is actually going for the Balentine family. Right. The Balentine family is really trying to move up. They've had a couple of great years. Their family has been growing. Now they have a little girl, and this little girl is really, really wanted to have her own room. And this is the house that the little girl fell in love with. Man, that's just a much better story than just seeing ABC Inc. in the contract. And right now, guys, look, for all of us, lenders, realtors, title companies, everybody that's in the mortgage and real estate industry, this is the value that we bring to the table. It's not just closing the transaction. Closing the transaction is easy. Writing the contract is a template. In the lender side, plugging in the numbers into our calculators and doing that's easy. It's these type of things that make you different and that gain confidence in you. So this call is something that a lot of people are not doing right now. A lot of agents are just saying, yeah, but they're getting 25 offers, so why call? It's just going to be one more of 25. Listing agents never answer their phone. Just call.
Or the other thing that I hear a lot is, oh, I know this agent, he or she has been doing it forever, so they understand. I have sat down with 20, 30, and 40-year veterans, explained the appraisal gap strategy, their mouth fell open, and they said, holy crap, I never knew about that. So let's not assume anybody knows blank. The stuff we're talking about is not rocket science. It's also not what's normally done. And we all get into a rut of doing things the way we normally do them. And look, I've said a lot. Okay, the 2022 and 2023 are going to be rough years definitely for the mortgage industry, but also for the real estate industry. There's a record number of new licensees in the real estate space, and that is just spreading or cutting the slices of the pie thinner and thinner and thinner and thinner. So make the phone calls and implement some of these strategies. Work with a good lending partner on this, because that's a critical piece of this, obviously. Dude, you could kill it in 22.
Yeah. Last thing, just to finish. You say this a lot. Saying things is one thing. Showing things visually is a completely other thing.
Big.
These things are easy to present in a visual way. So if you want to even take it further than just that, after the phone call, send an email to the listing agent where you explain the appraisal gap strategy with a little PDF with the example. And again, you can ask for it from us, where you put maybe a picture of the family that's buying the house. And guys, it really makes a difference. And that's what we're looking for. We're looking to give our buyers and sellers alike an edge.
Absolutely.
So now go do it. Because like I said, this is just tactical. You can start implementing these immediately.
Absolutely. And I would think you'd see an immediate difference in your business. You're going to get more referrals. You're going to all of a sudden provide more value and stand out more. And that has to be the goal, because we are at the crossroads where people are going to have to decide, do you want to be the cheapest or do you want to provide the most value? This is the type of value that an algorithm is not going to be able to provide.
Just to close it, on the tactical portion, take advantage of this. Look, you learned something new, right? Hopefully you learned something new and you haven't been doing this knowing that this existed. Well, you have a great excuse to call all your database, to call all the people that you know that are qualified, all the people that you know that are, gave up on looking for houses, and say, hey guys, look, this is what I learned. This is what we can do. Let's give it another shot, but let's do it properly this time.
Yeah, and we do that with our real estate.
Take advantage of that.
Absolutely. All right, man. Hey, great episode. I'm super excited for the next episode that's going to drop in 2 weeks, because we're going to talk about a way to connect with clients and really start a true client for life relationship with them, because our industry, the real estate industry, everybody says it. Very, very, very few people do it at all. And even fewer people do it really well. Some do, but very, very few do. Easily 95, 98, 99% don't. And we're gonna teach how we can get that started from the first conversation with the client. Be sure to tune in for that. It's gonna be awesome.
See you in 2 weeks, guys.
See ya.
Well, thank you guys for listening. And now it's your turn to implement everything you learned today.
Look, you have a question, you have a topic for a future episode?
Share with us.
Yeah, tell us what you're doing. What are you doing today so you could be successful tomorrow? Send us an email at success@realestateoftomorrow.com.
And don't forget to leave us a review, an honest review.
Screw an honest review. Leave us a 5-star review. And for every 5-star review we get, we're going to send you a badass Real Estate Meme t-shirt.
Those shirts are hilarious.
See ya.